Alright, this video is going to introduce you to financial statement analysis. There's a whole field in business of people who do financial statement analysis. They're called a financial analyst. So we can look at a financial statement and we can see the numbers, but we can gain even more insight if we start comparing. So let's look and see all the different ways that we can compare. First of all, we can compare horizontally. That is from side to side, meaning from one year to the next. We can also compare vertically. That is, we can compare items in a statement to one another. And among those, we can also compare one company to another company in the same industry. So we have lots of ways to compare, and a ratio just means to divide. So you're going to be doing a lot of division in your calculator for this chapter. You won't have to memorize any of the ratios. You can look at those and just apply them. I'll give you a brief overview of some of these options here. So the horizontal analysis means that we're going to be comparing one year to another year. So in this case, from 2015 to 2016. And I'm curious about these numbers because if I look, I can see that I had more net income in 2015, but yet my total sales were the same. So I need to look at these numbers and see what caused a decrease in my bottom line net income. So the first thing that I'll do is I'll find out what my change was. So there was no change in sales. I'll copy that formula down and I will see that there was a change in cost of merchandise sold and a change in interest expense. So the horizontal analysis is figuring the percent change. The way that I do that is I say my change divided by my oldest year. So 0 divided by 1,500,000 tells me that I had nothing, no change of sales. But I did have a 33% increase in the cost of the merchandise that I sold. In other words, I had to pay more for the merchandise that I was selling, but I didn't mark it up anymore. That's what caused this decline. Alright, and then I didn't have any change in administrative, but I did have a change in selling expenses, and it actually decreased, so that was a good thing. It just didn't decrease enough to keep me from losing money here. And then if I come down, my interest expense went from 75 up to 100, so it looks like I'm actually having to pay more interest on something, some amount of money that I have borrowed. So this is called a horizontal analysis because I'm comparing across, meaning I'm comparing from 2015 to 2016, and that's my percent change. Let's talk about a vertical analysis. So I'm going to actually get rid of this right now, and I'm going to do a vertical analysis. Vertical is comparing items up and down. So in a vertical analysis for an income statement, we're going to compare everything to net sales. And I'm only going to do 1 year, so I'm actually going to just look at 2016 here. Alright, 2016. I'm going to look at everything as a percentage of sales. So as a percentage of sales, sales itself has to be 100%. So I say 1,000,005 divided by 1,000,005 and I get 100%. Now I need to copy this formula down, but do you remember that I said that everything needs to be divided by sales, which means no matter where I copy my formula, I need an absolute reference to sales. So I'm going to put the dollar signs to indicate, hey, always divide everything that I copy to by sales. That will allow me to copy this formula down and find out what percent everything is of sales. So as I would expect, my cost of merchandise sold is my highest percentage. So I am spending 40% of my sales is my cost of my merchandise sold. So that means that 60% is profit. Then 20% is selling expenses, 10% is administrative expenses, and that leaves operating income to be 30% of my sales. Interest expense is 7% and net income is 23% of my sales. Now this is meaningful, but it would be even more meaningful to take it and compare it to last year, and to take it and compare it to others in my same industry. This allows me to compare different sized businesses to myself to see how I'm doing. From there, you will learn other ratios that are meaningful. For example, you may learn how to calculate the current ratio. You'll learn how to calculate the accounts receivable turnover, and you will learn how to calculate number of times interest charges are earned. And all of these will just be a formula that you will apply, and then you will read the definition of the formula so that you'll know the meaning behind that formula. And again, the actual number that you get is not that helpful until you compare it either to a prior year or to another company in the industry. So let me know if you have any questions.